$97.59. He's in Chicago, Vice President, Blue Line Futures, Oliver Slope. All right, Oliver, not going to talk about Mink right now, but we are watching a pretty big sell-off in the row crops. What's happening?
Well, I thought you were going to say that the buzz is all about the Mink farm. I actually have distant relatives with the Mink farm up in Minnesota, so I am somewhat familiar with that. But yeah, as you had mentioned, a lot of pressure in the grain markets to start the week, and I really think a lot of that's just on the back of the premium that we put into the markets ahead of that long weekend. And I think that premium came from the question marks. What if the rains miss in the Midwest? And what if a trade deal gets announced to some extent? And both of those really fell flat. So we're right back to where we started last week's trade for corn and soybeans, which happened to be pretty significant technical levels that we're looking at. For corn, 416.5 to 419. Those are the lows from the last 2 weeks. It's kind of a must-hold area for us. A break and close below there, and you're potentially looking at a drop down to that psychologically significant $4 handle. On the resistance side of things, we're looking at 432 to 435. We did poke our head above there at the end of last week's trade, but obviously have failed to really sustain momentum above that pocket. The bulls really want to see consecutive closes out above there to really encourage more of a short covering rally from there. And then on the soybean front, significant support, 1010 to 1015 in that November contract. Below that is psychologically significant $10 level, and below that, there's some air underneath the market from those December contract lows and April lows, which come in 961 to 971.
Okay, so we've hit corn and soybeans here. The wheat market as well. We had a big rally last week, and we're kind of giving it back.
Kind of giving it back like corn and beans. And wheat was really the weakest link to round out last week's trade as well. We saw continued strength in corn and soybeans to round out the week, but wheat really unable to find its footing in the last day of last week's trade, and obviously seeing a little bit of weakness here to start this week. Trendline support from those May lows and the 50-day moving average is going to be something that we're keeping a close eye on. That comes in near 540, and last week's lows near 535. So you've got a little bit of a support pocket there that the bulls are going to want to defend. I think one of the concerns that we have is that if the dollar does start to really stage a nice relief rally, that could in turn put pressure on some of these agricultural markets such as wheat.
All right. Hang on. We'll come back. We'll talk all things livestock. And after you've admitted it, I think we need to talk Mink as well. Hang on. This is going to be good. Market Day Report continues in a moment. Let's go back to Chicago. Oliver Slope, Blue Line Futures. So it's kind of interesting to watch the cattle market. Which direction is it going to go? It's kind of like a pendulum.
Yeah, it is. It seems like very back and forth. Certainly last week in the holiday trade, it just really couldn't make up its mind which way it wanted to go. And looking at live cattle, specifically that August contract, we're really jammed between the 50-day moving average as support and the 20-day moving average as resistance over the last couple of weeks. In fact, that 50-day moving average held 6 times in that last 2 weeks as support. And now we're back above the 20-day moving average. And the strong close today, as well as a strong and stable cash market, I think keeps the door open for a potential retest of those contract highs from June 9th, which come in just above 220. So I think some optimism coming back into the market to start a new full week of trade. And I think you could probably say the same for the feeder cattle market, which is just knocking on the door of contract highs as well, up at 314.20.
Yeah, and what about the hogs? Again, hogs, at one point we think they're riding the coattail, then they'll break out. But, you know, you look at just year-to-date gains, hogs are the winners.
Hogs have been the winners, and the funds have been placing their bets accordingly. Funds have been net buyers for the last 10 consecutive weeks. Now, I'm sure this afternoon's Commitment to Traders report will show that streak has come to an end. Typically, that report is released on Fridays, but due to last week's holiday, we're going to get that update this afternoon. But nonetheless, I think seasonally, a weaker time of year, you've got funds who've been establishing a rather large net long position. So it's just a profit taking over the last couple of weeks in what's seasonally a weaker time of year. We've got the 50-day moving average coming in at 104.85, which coincides with the February and May highs and the breakout point from June. So that's going to be an inflection point here through this week near 105.
Okay, normally we talk big reports like WASDE coming out on Friday. We talk from time to time about crop progress reports, but there's a report on Friday I didn't even know existed from USDA. It's a mink production report. You know anything about mink?
I do have some relatives that have a mink farm up in Minnesota. I don't know much about it, but I know that there is a big industry for it.
Well, and if you've ever heard of places like Green Bay or how about Prairie du Chien, right on the river, those were big markets, trading markets for mink years ago. So there you go, Oliver Slope with the mink production update.